Hi, and welcome to this week's look at the major news stories so far and what's coming up. And we'll take a look at this week, the US stock markets and the fact they're actually hanging on for some data tomorrow before any serious moves, I would suggest. We'll take a look at the euro dollar and the dollar Swiss franc, what's been happening there. Thirdly, we'll take a little look at Brent crude, what's happening with oil prices in general also and why. And finally, the gold prices are also setting a new high. So, US stock markets are awaiting data. There's important news coming out this week. We've got the non-farm payrolls on Friday at 15:30 p.m. That's GMT +3. And alongside that, we've also got data on the unemployment rate. Now, non-farm payrolls, we're expecting a figure of about 192,500. The previous figure there was 275,000, so a bit of a change. Whereas the unemployment rate is expected to remain unchanged at 3.9%. So obviously normally we're looking for positive figures here, but it may be slightly different this week in that bad news could be good news. Jerome Powell, chairman of the Fed, said just last week that a weakening labour market would be a reason to cut interest rates. So clearly going to be some quite important figures. Take a little look at the S&P chart and see what that's showing us on the eve of those figures. Now the price is moving in the ascending channel, but showing some signs of weakness around the 52.50 level. We're looking at a 4-hour period chart here. We can see the sharp increase A to B, then followed by a prolonged correction, that's B down to C. That could be due to some large volume of sell orders near that key 52.50 level. There was an attempted breakthrough of 52.50 towards the top at D there that we can see, but that failed and the price dropped sharply from the upper border of the channel to the lower border. And we can see a bit of a rebound on the eve of the non-farm payroll figures, but it seems to be a little less dynamic to the previous rebound and looks like it may need a little bit longer to approach that median line. So if, as suggested, the publication of non-farm payrolls and unemployment data are going to be key market drivers the next day or two, we could see a new top of F could form, wherein the tops B to D to F could form a bearish head and shoulders pattern. We also need to take into account the median line of the ascending channel, and 52.50 could continue to act as resistance for the bulls. So as I say, a little bit of conflicting information there, but certainly it looks like for the end of this week and possibly into the start of next week, the figures tomorrow are going to be key drivers. Okay, now we're going to take a quick look at a couple of currency pairs, and the euro dollar seems to have started a bit of a recovery, and the dollar against the Swiss franc could extend its gains. Now we're having a look at the charts here. These are charts from Wednesday, an hourly chart, and we can see that the euro dollar fell below 1.0750 before the bulls appeared against the US dollar, and it traded as low as 1.0724 before the move above 1.0745 resistance zone. So the bulls did appear to come back out a little bit, and we actually had a break above the bearish trend line with resistance at 1.0765. And take a look at some immediate resistance, that's shown around the 1.0785 mark, which is close to the 76.4% Fibonacci retracement level. Then we're looking at 1.0805, further resistance then 1.0825, and then 1.0850. And as I say, these are the charts we're looking at are from Wednesday. At the time we're recording Thursday, we're actually around the 1.0850 mark, so we're close and bashing against that resistance level. Any move further from here, we may push upwards to 1.920. On the flip side, support, if we do see a fall, we've got support 1.0765, then down to 1.0745. A downside break here, and then the next level at 1.0725 could see us head down to 1.0650. But as I say, at the time of recording, it has gone up a little bit further, but we are around that resistance level at 1.850 for the euro dollar. Now, dollar against the Swiss franc. Well, that started a decent increase from 0.9005 support level. It climbed above the resistance zone at 0.9035. Tested 0.9090. And currently we're sitting above the 0.9070 level. So eased off from that test of 0.9090, but still looking fairly positive. Support certainly around this level, 0.9070, and then we'd be looking at the 50-hour simple moving average, which will come in about 0.9055. If that's broken, we could be looking at the downside there of 0.9035 for more support. After that, back down to 0.9005. We saw that resistance, though, on the flip side of the coin near 0.9090. Above that, if we do go through that level, we're looking at spot 9120 and spot 9140 as resistance for further increases. If we do see a clear break there and the RSI climbs above 65, we could well see another increase starting, and it could possibly test the 0.9200 level. As I say, big figures to come out. They're going to affect both the stock markets and, of course, currencies, particularly if we start talking about inflation and interest rates. So don't forget your risk management techniques. We could see a bit of volatility in the next few days. Okay, time now to turn our attentions towards the commodity market. And this week, Brent crude oil is its highest price since October 2023. The price this week has exceeded $89 per barrel. That's the highest since the end of last October. So why? What's happening? Well, the OPEC Plus meeting ended this week, and the exporting countries agreed to continue their limits on production. Not a massive surprise, however, there had been a little bit of dissent at the previous meeting from some countries that wanted to increase their production, but it's being held. The limit is being held. On top of that, we have the Ukrainian drone attacks on oil refineries in Russia having an impact on the price too. And the latest data on the strength of the US economy is coming out. Could there be increases in demand? All these factors are rolling up together. We take a look at the chart. What does that show us? Well, the price is in the ascending channel, which is shown in blue, and that started back in 2023. So that ascending channel has been in place for quite some time. We do see a little increase in demand this spring, and that saw the price rise into the upper half of the channel and formed a steeper growth trajectory. That's shown with the black lines. Also worth noting that median line in the channel acted as support. That's shown there with the arrows and has done on a couple of occasions now. So clearly quite a key support level. Now the upper limit of the channel is circa $92 per barrel, and it's possible with this sort of trajectory we may reach those values over the next month or two. However, we have seen an increase of more than 5% over just the last 5 trading sessions, which could indicate the potential for a pullback. Not quite there yet, but worth noting the RSI indicates that it's overbought and the price is at the upper black line. Now, if a correction scenario is realised, we may drop back to the $87 per barrel level, which was previously quite an important level of resistance. Again, at the time of recording, we're circa $88.90 a barrel, so still up there. Not obviously exceeding that $89 per barrel just yet, but let's wait and see. It's a difficult time with an awful lot of factors contributing to market movements. Okay, we're going to finish off. I'm going to stick with commodities, and that's because the gold price is setting more new highs. Take a look at Wednesday's gold chart. That showed the price exceeded $2,250 per troy ounce. In fact, at the time of recording, we're even slightly higher now, with the price around the $2,285 per ounce mark. Again, why? Well, obviously, yet again, we've got to talk about geopolitical tensions. The military conflicts in the Ukraine and the Middle East do not seem to be subsiding. On top of that, we've now got the threat of terrorist attacks, and that threat seems to be growing currently. And people are generally concerned of new hotspots may occur on the world map, with other entities, other countries and governments getting involved. Secondly, we've also got concerns of a new round of inflation beginning to raise their ugly head. That's due to the rising commodity prices that we're seeing. In both cases, of course, gold acts as a safe haven. The geopolitical concerns going on, fears of inflation, etc., gold becoming more attractive. Now, the price of gold has increased by more than 12% in 2024. But can the rally last? Let's take a look at the chart. The ascending channel, which was showing in blue. Have a look at that channel. We see the price is in the upper half and has tested the support of the median line. Fairly good support level there, I would suggest. And since the start of April, it's demonstrating dynamics that direct it towards the upper border. Again, we've got some quite clear drivers for that, as we've already mentioned. We also take a look at the Fibonacci proportions. If we assume that point A to point B equals 100%, then the decrease B to C finds support in the zones of levels of 0.5 to 0.618. Then the target for an impulsive price growth from point C may be the Fibonacci proportion level of 1.618. That's the technical analysis of the gold charts indicates the price may rise to the $2,333 to $2,380 zone if this bullish sentiment continues. And as I say, bullish sentiment here driven by some quite serious factors. Gold has and probably will remain for a long time a safe haven, and we are starting to see it really come into play. As ever, keep your eyes and ears open. Don't forget all of these different factors coming and driving markets at the moment, and we wish you luck with your trading in the week ahead. Bye for now.